Most options platforms show you a chain. ORATS manufactures a volatility model, cleaned, smoothed, earnings normalized, forecasted, and then proves its value at scale with 300+ million pre-calculated backtests. The tools you see are just different front ends on top of the many ORATS APIs. ORATS began by solving a market maker's core problem. Options quotes are inherently noisy, yet trading and risk systems require consistent Greeks, reliable theoretical values, and identifiable sources of alpha. In 2001, ORATS was founded around its smoothed market values SMV system, designed to generate high-quality implied volatilities, Greeks, and theoretical pricing. From that foundation, ORATS expanded into forecasting models and core data products, followed by APIs, and ultimately a full suite of tools, backtesting, scanning, and analytics, built on top of the same data engine. The result is a complete options ecosystem. Rigorous production-grade infrastructure for the essential blocking and tackling, with embedded opportunities for alpha generation. Here's the simplest timeline. 2001, company formed and SMV designed. 2005, core data productized. 2010, APIs offered and backtesting introduced for specific clients. 2017, wheel backtesting platform released publicly. 2022, dashboard launched. 2023, expanded trading integrations and launched the Backtest Finder. When we say API first, we mean the platform is powered by a consistent set of endpoints. A core data API with EOD history and updates, a real-time live data API, an intraday API for minute-level history, and soon-to-be-released Backtest API built for AI interfacing. Scanning in ORATS is engineered as a workflow. First, use stock-level options intelligence to narrow the universe. Then scan option structures on the winners. The stock scanner covers 5,000+ stocks and ETFs and exposes 700+ proprietary option indicators plus fundamentals. It also supports component composites, _C tickers, built as weighted averages of sector ETF constituents. Under the hood, many stock scanner columns map cleanly to data API endpoints, especially core data and summaries. For example, XERNIV30D is the 30 calendar day implied volatility with earnings effects removed. Slope summarizes skew steepness. Contango measures short-term term structure shape. And ORFCST20D is a 20-day volatility forecast built using X earnings signals and related ETF relationships. This is alpha on a stock level. After you've identified underlyings, the option scanner ranks actual trade structures. ORATS emphasizes 3 theoretical edges that go beyond midpoint pricing: distribution edge, D%, forecast edge, F%, and smoothed edge, S%. D% uses 15+ years of history and computes probabilities across 21 price buckets for the trade's time horizon. F% uses forecasts for volatility surface parameters and earnings effects. S% compares the trade to SMV-based theoretical pricing, and POP%, probability of profit, is calculated as the area under the model distribution where trade profit is positive. At the strike level, the data API exposes the SMV cleaned quote model directly. In the strikes endpoint, SMV vol is the ORATS final implied volatility used to compute theoretical values like call value and put value, with residual rate used to align calls and puts via put-call parity. Forecasts are computed and appear next to each market value. Backtesting is where we make the value measurable and prove the alpha. On the platform, you can browse over 300 million pre-calculated backtests, and our backtesting engine runs back to 2007 across thousands of symbols and many strategy templates. Instead of forcing you to run everything from scratch, we built a database-first approach. Pre-run millions, eventually hundreds of millions of strategy variations, then let traders query the results. At ORATS, that was a deliberate engineering pivot. Run the backtest before you even touch the software, so users can search the library instantly. We're also explicit about execution assumptions. Our methodology uses a full market snapshot about 14 minutes before the close, because closing quotes tend to deteriorate, and it applies modeled slippage, ranging from roughly 75% of bid-ask width for single legs down to about 56% for 4-leg spreads. That's what turns backtesting into a discovery engine. Backtest Finder and Trade Ideas are built around that idea. Match strategies whose entry criteria fit the current market environment. Then scan for current trades consistent with those strategies, ranked with probability of profit style metrics. Once you've identified a promising backtest, optimization is where we turn it into something more robust. The strategy optimizer starts with a saved backtest or a pre-calculated one, then lets you add indicators and entry and exit rules, and validate whether the improvements are real. We also use p-value calculations, permutation testing, and 10,000 modified Monte Carlo simulations to help validate that performance improvements are not just random. Even rigorous backtests still look backward, so we emphasize forward testing, running a strategy in real time against live market data without risking capital as an out-of-sample validation step between backtesting and deployment. A sophisticated yet easy-to-use forward testing auto trader launches from the user's saved backtest list. On the execution side, you can send orders and manage positions in platform, and we support paper trading and broker connections, including interactive brokers, TradeStation, and Tradier. We have a full automated trading workflow that links the whole process together. Find a strategy in Backtest Finder, optimize it, save it, and forward test it automatically. The Trade Journal tracks all the trades with a nifty interface. On the API side, our live data endpoints provide real-time calculations with less than 10 seconds of market delay. For API users querying live data, the stock price uses put-call parity-based estimate to avoid exchange fees. Risk in ORATS grows out of the same distribution logic we use to rank trades. In option scanning, we build a return distribution from long history, normalize it across volatility regimes, and use it to compute expected values and pop percent. At the trade level, the data layer is precise. Strikes include Greeks like delta, gamma, theta, and vega derived from the SMV process alongside theoretical values. Those are the inputs you need for both risk decomposition and scenario modeling. The risk profile tool visualizes portfolio exposure through distribution curves, 3-day standard deviation paths for grouping diverse positions, and aggregated Greek exposure across symbols, with groupings that help surface sector and correlation clustering. Earnings is a natural showcase for this API-first approach because it's where the nuanced volatility math becomes most visible. We emphasize X earnings implied volatility as a normalization because earnings can distort the IV series. In the summary schema, XERNIV 30D is defined as the 30-day implied volatility with earnings effect out. We also solve for an implied earnings effect and an implied move as part of fitting the term structure. In our earnings tools, we show the simple earn move baseline as the absolute value of the last 12 percentage moves after earnings announcements, used to compare to implied earnings moves. Ticker analysis visualizes the last 12 earnings with implied versus actual moves and provides a downloadable set of earnings metrics, including inner earnings IV and HV. That's the ORATS product philosophy in one sentence. Build the calculations once, publish them via API, then design tools that make those calculations tradable. If you're interested in adding rigorous, data-driven research, modeling, and analytics to your workflow, visit us at orats.com and explore the tools and APIs we've built for options traders.